What's up, guys? It's Michael here. In this video, we're going to talk about the federal government's printing more money again ever since the collapse of SVB and the other two other minor banks. So, first, we got to look at whether or not the United States is it a command economy or is it a free market economy? And most the people who do not really delve into this topic will probably say it's a free market economy, but in reality, I beg to differ. It's more of a command economy. So when you put these two in the spectrum, you have one side, free market, and you have the other side, more of a command economy. You can't command economy. Most people would think this would be more authoritative countries such as China and Russia, and maybe certain other countries. But a lot of people consider that America is more free market. But if you think about it, if you think a little bit outside the box, and you just ask yourself a couple basic questions. Is, for example, what dictates the market from going up or down? What dictates what is supply and demand? How does it operate? What dictates, for example, when a company crash or is considered too big to fail, and what happens when they get bailed out? For example, command economy can go as when maybe they have conflict of interest and their interests collides with each other. They don't want that business to collapse. So they will, under basis of a command economy, they will bail them out. Just like I command you guys to click the subscribe button down below and the like button for the YouTube algorithm. But first, here are a couple key points. The main point is the federal government panicked and they pivoted, meaning is decide to print money again. So you gotta look at two things: quantitative easing and quantitative tightening. Tightening is to basically try to take back all the money they basically released to the economy. For example, the stimulus checks, and I made a video on how you get your stimulus check. If you missed that out, you can go check that out on the list, and most likely you will not be able to claim it anymore. Those were years back. If you didn't watch that video, tough luck. If you did watch that video and click the subscribe button, then good for you. I'll make more videos like those if another time like this ever appears again, which, based on what's going on in modern history, about every 10 years or so, something major like this happens. But first, you gotta look what happened. First, they print a lot of money. Then, recently, within the past couple of days, stocks and crypto just jumped back up like crazy, which is crazy because they pivoted. They printed it. They call it not printing money. They still call it quantitative tightening, which they technically try to low key hide it because SVB banks failed and they have a conflict of interest. They don't want everyone else to start bailing out, so they print out money. Stocks went up and crypto went up for a short period of time, and most likely it'll go back down again because they're trying. The whole goal is to fight inflation, and they just pivoted for the small short duration of time, which honestly, that's the definition of a command economy. So if you look at it this way, what other aspects did it do that considered as a command economy? More authoritative, not really free market. A free market economy, the best example would be Hong Kong. Which is a good thing or is a bad thing? There are good and bad things for both sides. For example, if you look at Hong Kong, free market economy, it's so free to the point you got people stealing off of each other. There's basically no rules or regulation. Everyone's copying everyone's products, and you don't really have anything done. So it's a balance between free market economy and basically a command economy. Somewhere in the middle would be the most ideal. And in this case of the United States, this is kind of pushing more towards a command economy. For example, look at the 2008 housing crash. What dictates where housing crashes go up or down? Interest rates. So interest rates, if it's too high, then everyone will stop borrowing money. If it's too low, everyone starts borrowing money like no other tomorrow. And then now you gotta look at what happened back during the Obama administration, where GM, the company, was failing because no one wanted to buy a vehicle that comes out of the lock and breaks down in the next couple of miles. And it costs you an arm and a leg to repair every single time. And all suddenly, the company wasn't doing well because of bad business management. And guess what? They got bailed out. A company that was designed from the ground up to fail got bailed out. And right now, they're still not doing really well. And it is what it is. So that's another definition of command economy. Another good example is currently the real estate market. What's dictating for them going up and down? Interest rates. You look at especially food and pharmaceuticals. Pharmaceuticals. Why are drugs in America or healthcare are very expensive compared to other countries, say like Europe and Canada? Some people say because of they got higher taxes. Personally, I beg to differ. That's only one part of the equation. Another part of the equation is maybe if they allowed more companies to compete against ones that are basically monopolizing the whole industry. For example, CVS will be one of the major monopolies out there. Walgreens is another major monopoly. The only ones that are really going against it in the United States will be Mark Cuban and his corporation. That's technically another third wheel because he has enough power to, but other smaller companies and corporations don't have that type of power because they control the insurance companies too. So if you look at food and agriculture, who really owns the whole entire place? It's basically really few corporations and companies that own most of the smaller places and lease them out to other smaller corporations and companies. If that's the case, then you have really lack of competition, sadly. So basically, the United States is more of a command economy. And the good and the bad thing is, the good thing is, let's look at the good thing. The good thing is that it's pretty predictable what they're going to do. Because if you look at history, what they did back then, what they do back then, they're going to apply to now. For example, the best example will be the presidential election. Everyone was complaining about the 2016 presidential election of Donald Trump. Donald Trump came in and he brought in his policies, and now they say the current president Biden, which is going to go a different policy as Trump. But if you ignore all the media and just see what they personally do, just only look at the results base, what they do, they basically follow what the previous presidency did. They just improve upon it. So it's a basic predictable pattern, which is a good thing about a command economy. You're able to tell. If it's a free market economy, it's a good thing too. But if it's too free, you end up like Hong Kong. So somewhere in the middle will be ideal. So this is an update for 2023, and pretty soon a CPI inflation report will be coming out very soon. And also, I'm still working on that video on comparing the two Teslas because there's actually a lot to discuss in that video on whether or not you should get a new vehicle. But for the economy's inflation report, this is a really interesting short pivot, and it shows what type of economy the United States really is. As I already knew this before, which you guys should click the subscribe button, but United States is closer to command economy. But at the same time, it's getting to the point is it needs to push back towards more towards a free market economy. Somewhere in the middle would be the most ideal. That's it for this video. I hope you guys enjoy. Please like, share, and subscribe, and I'll see you guys next time.